After the fireworks of the last session, we are going to look at the question of mobilising investment in the UK. And obviously, I'm not going to go into all of the, this is obviously a significant moment. The Ofcom is looking at is conducting its own digital communications review at the moment, which will look at a whole host of questions about the broadband market in the UK. And I'm joined here by 4 panelists who will address sort of various issues to do with that. I'm just going to introduce them very quickly. The first on the end there is Gerard Lyons, who's the Chief Economic Advisor to the Mayor of London, and he'll focus on the public aspects in investment and what support may be needed to deliver the benefits to the UK economy. He's advised Boris Johnson on economics since 2012 and was formerly Chief Economist at Standard Chartered. The next panelist next to him is Robert Wall, who is the Senior Principal at the Canadian Pension Plan Investment Board, and he'll be talking about the approach long-term funds take to investing in infrastructure. And it's worth, I think, noting, and Robert will probably correct me, that while the Canada Pension Plan has invested in telecoms infrastructure elsewhere, it hasn't yet done so in the UK. Thirdly, next one along is Nick Delfas, who's a partner at Redburn, the leading independent equity research and trading house. He'll be looking at the UK market as it currently is and addressing this question of what it delivers in terms of investment and also whether alternative models could deliver more attractive returns. And lastly, we're joined by Andrew Griffith, the Group Finance Director of Sky, who I think will set out Sky's perspective on the current situation. So without further ado, I'd like to ask Gerard to kick us off.
Good morning. It's a great pleasure, great honour to be here this morning. Whether one looks at the UK economy as a whole or indeed any particular sector, I tend to think the outcome depends on the interaction between the fundamentals, policy and confidence. I'm not going to focus on fundamentals because you know the fundamentals of your industry far better than I do. But I like to focus more on the policy and by implication, confidence. Confidence is always difficult to predict. We know that if you do the wrong things, it can dent confidence in a sector. But confidence is very much linked to incentives, it's about ambition, it's about vision. But let's look at the fundamentals. Whether one looks at, the policy. Sorry, I'm going to miss the fundamentals. So let's look at the policy. Whether one looks at it from the top down or the bottom up, often the key issue that comes out is the need for competition. And when one does this from a London perspective, it's quite interesting to note that the top 600 cities in the world currently account for half of global growth. In 20 years' time, the top 600 cities in the world are expected to account for 2/3 of global growth. What's particularly a challenge for us in the West is of that top 600 cities, 137 of the top 600 are currently in the Western world. In 20 years' time, only 20 will be in the Western world. What we're seeing, London thankfully will still be one event, so don't worry. What we are seeing therefore is the whole emergence of new players, particularly mid-tier cities. These are cities that are able to almost leapfrog. They're not encumbered with existing technology. They're able to give tax incentives. They're able to be smart with new information, new technology. So that means that in the West, particularly in the UK, we need to embrace change. At the same time that this top-down change is happening, there is a phenomenal change in working practices. There's greater international migration. There's greater domestic migration. And migration is an important word, not just in terms of people, but also firms. Skilled workers and small, medium-sized companies are internationally mobile. Therefore, it's very important to actually focus on what you need to keep them here in the UK or to attract others to here in the UK. And connectivity is one of the buzzwords. Connectivity can have many different aspects to it. Transport or communications being 2 key aspects. And in some areas, it's the same issues. It's about speed, it's about cost, it's about availability. The European Commission's Digital Agenda project recently came out with an assessment of the EU. And I think part of the challenge, in my view, is that here in the UK, we tend to be too obsessed by the EU. We tend to always look at that for comparisons, whereas when you look at what's happening at a city level, it's new players, particularly in the East, that are really setting the world alight. But in terms of the EU, the UK is slightly below the EU average on speed in terms of connectivity. Cost is pretty much in line when you take out the expensive countries. and availability is similarly in line. But during the recession and recovery, what happened in London was sentiment started to change about London in terms of its connectivity. The feeling a few years ago was that London was pretty good. The way I would describe it is like a barbell where you have the weights at two ends. And it's like the old joke, if you put your head in the oven and your feet in the fridge and take your temperature and your belly button, the temperature says you're okay, but you're boiling at your head and you're freezing at your feet. And in some respects, London was like that. The hot area was the city, hence everyone thought this is the key cluster, this is where connectivity is top of the tree. But what we also found is as more people started to be self-employed or small firms started to crop up, they were working in other areas and they started to complain, naturally, to their representatives, whether at the GLA or elsewhere. And then research was done to show that many areas in London were actually not that good on connectivity. On top of that, we saw a new cluster emerge, the whole tech cluster, the fintech cluster. And the tech cluster was attracted to Shoreditch and to Croydon because costs were low, the vibe was good. But hey presto, you wouldn't expect the tech sector to be in a part of the city where connectivity wasn't good, but the actual turned out to be not that great. So London is basically a city where at one part of it it's really good, hence this barbell, at other parts it's not so good, hence the need to change. The feeling is maybe we should view communications as utility, but that falls foul of EU competition law, etc. So you have to work around that. What's happening in London is a focus on where you can actually pull the levers, improving information and transparency. The connectivity map is now available, so it's working on the demand side. People can actually see how well or poorly connected they are. It was a scheme borrowed from New York, Boston, and San Francisco. So basically improved transparency, and the implication in turn, or the hope, is that in turn that will increase market opportunities for new providers. They can see where there are gaps, where there is market failure. The City of London, or London, was allocated the mammoth amount of £25 million in the budget this year for its digital inclusion strategy. Very small amount. I was being quite trying to be ironic there. Very small amount, but it highlights the constraints on cash flow here in the UK. Also making the planning application come into the Mayor's area of remit also is an important part of this, but we can talk about this more in the Q&A. At a national level, though, I would say the 4 I's are the key issue. Investment, innovation, infrastructure, and incentives. Investment in the UK is not particularly high when you look at international comparisons. This is as an economy as a whole. Innovation is quite good, but we don't always bring it to market. Infrastructure spending is quite low, and therefore you need to incentivize the private sector. I'm very excited about hearing someone from the Canadian system, because Canada and Australia are 2 pension funds industries where they invest in the longer term. One of the big perplexing issues we have in the UK is that despite the city, despite the financial sector, despite the wealth of experience there, it's very difficult to get private sector investment from the pension funds, etc., into infrastructure spending in the UK. The 2 areas that are always identified is that basically they want to have it every way. They want all the success themselves, all the hit being taken by the government, a bit like the banks. Basically, therefore, a government guarantee is always called for. On top of that, the implication is that when you can have a definite future revenue stream, then there's more likely to be private sector investment, whether it's a road, a rail. Communications is more difficult. Where is the definite revenue stream, particularly when you have an environment where no one quite knows where the future is going to lie? Therefore, on policy, it comes down to, do you have gradualism or do you have immediacy? Gradualism is always the tendency, partly because you're biased towards the status quo, and incremental change is often seen as not causing problems. If you go for immediacy, i.e. a dramatic change, you need to clearly identify the quick wins as well as the longer term vision. And then you have to very much, the thought process is to have an enabling environment. But let me finish on just some lessons from elsewhere. Energy. Here in the UK, it's failed. We did well up to the 1990s, then we failed to anticipate future capacity, and in some respects, we got diverted into green. Green is important, but don't lose focus on the capacity. You could say in communications, is capacity the issue? Maybe we've been diverted into rural. Doesn't mean rural is not important. You can do that as well as focus on the longer term vision. Rail. In the 19th century, private sector built the rail system. The government enabled them to do it. Planning was easy. They had a vision. Private sector now fails in terms of rail provision in the UK because the regulator and the infrastructure provision is seen as being substandard. Roads, huge over-provision in the 50s and 60s. Then they thought, or we thought we'd done it, then we almost stopped, and then planning permission came in. France, since 1990, has built more roads than the whole of the United Kingdom's motorway network. Planning permission and thought process. France also gets it right in terms of nuclear. It has a longer-term vision. So you need to think of these lessons from other industries and what does it bring to your area of communications. But as I say, infrastructure, key, government can't do it, enable the private sector, investment, encourage more investment, get more innovation, but at the end of the day, you need to have the incentives right, and the incentives are to increase the competition in the whole sector. Thank you.
And thank you, Gerard. I'd like to ask Robert to follow on.
Well, thank you, Gerard. You've teed my speech up very nicely by pointing to infrastructure and investments, which are the two areas that I specialise in. So my name's Robert Wall. I work for the Canada Pension Plan Investment Board, which does exactly what it says. So we invest on behalf of 18 million Canadian contributors and beneficiaries, helping them create their financial stability in retirement. The fund itself stands at 270 billion Canadian dollars today. That makes it a large fund, but it's also growing. It'll be 500 billion Canadian dollars by 2030. I think the most important thing about this fund that I joined, and obviously I have a New Zealand accent rather than a Canadian one, is that it's very much a global investment organisation. We're headquartered in Toronto, but we have 6 global offices. And here in the UK, we've been operational since 2008. We have 100 investment professionals investing in real estate, infrastructure, private equity funds, as well as public markets and hedge funds. To date, we've invested over 46 billion Canadian dollars in Europe, and that represents about 17% of our total assets. Our scale and long-term investment horizon means that we can take important decisions around the provision of capital to complex projects, to new investment opportunities, and be a flexible and patient partner to the private sector as well as the public sector. And here in the UK, we've invested heavily. We're the largest shareholder in Anglian Water. We are the major shareholder alongside Westfield in the Stratford Shopping Centre. We are also the largest shareholder in Associated British Ports, the owner of 21 ports around the UK. We own material stakes in the Birmingham Bull Ring, and we're the largest provider of independent student housing. This year, we will commit to invest 1.1 billion sterling alongside Hutchison Whampoa in the merger that will create a new telecommunications entity out of 3 and O2. But particularly relevant for today's discussion is our investment in Arqiva, where we own 48% of a telecommunications infrastructure business here in the UK. Arqiva is a fascinating business, and if you excuse the advertisement briefly, I'm a director of it and have been for 5 years. I feel quite passionately about this business. We provide and stand at the heart of the infrastructure for television, radio, mobile communications, and other wireless communications throughout the UK. We own towers or masts that extend over 300 metres tall. That's taller than the Shard. We own and operate 8,500 sites that are in operation in support of the mobile network operators. We're also working with the government to build new shared sites for villages that are currently under-provisioned by mobile phone coverage. And we are the leading provider of in-building solutions for mobile network operators, enabling capacity and in-building coverage in places like the Canary Wharf and the Excel Centre. We're one of the largest providers of public Wi-Fi, including at all of the major UK airports. And we're currently building a £625 million machine-to-machine network in the north of England and Scotland in support of the smart metering rollout. That will be one of the largest machine-to-machine networks. And alongside that, we're deploying the capital necessary to run an Internet of Things network in the 10 largest cities in the UK. And that's material capital that the CPPIB alongside other long-term infrastructure and private investors, are provisioning through the rollout of communications technology in the UK. So what do we look for in our infrastructure investments? I think it's quite simple. We look for large-scale investments. We invest a minimum of 500 million sterling in any one transaction. Our most recent transactions have all been over £2 billion or $2 billion. And so these are large-scale investments in big companies. And as a result, we're looking for three key things. The first is stable political leadership. Planning, building, and operating infrastructure is de facto a long-term undertaking. It requires political support over a time frame that typically extends beyond one election cycle. Secondly, but connected, is a requirement for the prioritisation of infrastructure. We need to know that there's been engagement with all of the key stakeholders, be they public, private, and financial sectors, before we'll participate in an investment. And thirdly, the stable legal and regulatory framework. When countries make radical or frequent changes to their regulatory environment, they are effectively shooting themselves in the foot in their ability to attract international capital. So how do we view the UK? Well, the UK remains a very attractive investment jurisdiction and has been for many years. That said, I don't believe that this country can be complacent. Political risks have certainly increased in recent years, with the potential for a second Scottish referendum, the ongoing debate around the UK's position within the EU, and also the desire, or at least the temptation, to participate in topical or near-term political issues around regulation of various different utilities is something that should be resisted outright. The UK is a global leader in the attraction of capital, and I hope that it continues to remain so. This has been particularly evident in the work that's been done on the National Infrastructure Plan, and the National Infrastructure Pipeline, and most recently the National Infrastructure Commission, which will be headed by Lord Adonis. We're very supportive of that type of long-term thinking, as it aligns with our desire to invest for the long term. So we have also looked globally at telecommunications infrastructure and have already had a number of the cases that we've been involved with spoken directly about some of the other panel members. We considered an investment in Singapore in the ducts and manholes that support the next generation network there. We have seen the thriving independent fibre to the premise network owners and operators in the Netherlands and have looked to make investments in that jurisdiction. We've seen firsthand the damage that public participation in the national broadband network in Australia has done as a major owner of telecommunications infrastructure in that country as well. And we've watched with some envy the example that Vanessa spoke to in New Zealand. And from these experiences, and consistent with our strategy, we think that independent ownership of core networks can be beneficial to a broad set of stakeholders. That said, each jurisdiction is different, and I think the participants in this room are doing the right thing, thinking broadly around the alternatives, but equally thinking specifically about the UK's opportunities, but also challenges of having an embedded system. The UK benefits from a large amount of private investment, primarily because of its stability, and I think that's most recently evidenced in the way in which a number of government departments work together to deliver the Thames Tideway Tunnel funding process. This is, for those who don't know, a major new construction of a sewer under the Thames stretching from Hammersmith to the east of Greenwich. By creating a regulated asset base, despite it being a construction project, many new investors were keen to participate. So let me say in conclusion that the CPPIB is looking to participate in big and bold opportunities, both in the UK and abroad. We are looking to deploy large-scale capital in projects that help address the sizable infrastructure gap. We need governments and regulators to share our mindset, to move beyond day-to-day politics and focus on the long-term needs of the country and the long-term needs of investors such as ourselves. We welcome the current focus on infrastructure investments, and we hope that that ambition plays through, and we look forward to being part of the delivery of that. Thank you.
Thank you very much, Robert. If I could ask Nick Delfas to address the investment questions.
Okay, thanks very much indeed. So, first of all, just a word of introduction. Why am I here? We're Redburn. We're an independent research house. You could say we're structurally separated from the banking industry. So unlike most of the peers of the room, although there are exceptions, we don't undertake any corporate work. We're not corporate brokers. We don't place shares. We just give advice to fund managers and conduct agency trading. In terms of some disclosure, we have a neutral rating on BT. We don't rate Sky currently. We're a buyer of Liberty and a seller of TalkTalk, just so it's a broad spread of opinions there. So I'm going to skip through a few slides because much of this is in our submission, which is on the Ofcom DCR website anyway. We think that the current situation in the UK market has got some risks for investors, and there are a lot of myths of how the UK is doing, which we think need to be debunked for investors in the UK to understand what risks they're taking. I think the first myth we would like to talk about is the fact that prices are falling. It's true that prices have fallen, but it's also true that they rose strongly in the last 5 years, and line rental is up very, very strongly, hitting the least well off, a 10% compound growth in an era of zero inflation. Prices are not exceptional in the UK. They are low, but they're not exceptional. And even some US broadband-only products are comparable. And I know there's a lot of debate about this because pricing is very complicated. And there are some offers in the UK which are extraordinarily cheap. But if you look at average prices paid, we don't think that prices are extraordinarily cheap in the UK. I think this is the most important slide. We've talked about this already in previous presentations. It depends how you define speed. If the definition is anything above 30 megabits per second, the UK does quite well. If you look at higher speeds or fibre to the home, we do extremely poorly. And in the House of Lords Select Committee chart on the right, we're just above Minsk, which I don't think is where we want to be. And then this is the most important slide of all because there's a long lead time, obviously, in infrastructure investing. And if one looks at what we're benefiting from today, we're benefiting from the cable investment of the 1990s, which drove, in the end, broadband from Virgin up to 100, now 150 megabits per second, and then forced BT to follow with the VDSL investment. VDSL, however, has been very cheap. There's no sign in the Openreach capex of the £3 billion that BT claims has been spent. It's very, very flat. And group capex has come down, while BT UK subsidies are going up. So I think it's very important to note that the money is not going in to the networks in the UK right now. And it may be that cheap upgrades can work, but I would say that possibly that's a risky strategy. And then the final one, which is more controversial, I think all I would say about this is everyone has a right to bid for EPL rights, but I think there is a structural problem where a company is receiving subsidies of £1.5 billion if that same company is then bidding in the private market for EPL. I would just ask you whether that's a structure that you would design from the outset. In a similar way, actually, you could say, why would you keep equity advice and capital raising in the same house, or casino banking together with retail banking? So this is a slide I want to spend a little bit of time on. I think the key points I'd like to make are that investment levels, despite BT's claims, have been flat to down since FY09. I think what's also very important to note is that Openreach makes a huge amount of money. The reason for that is that the regulated asset base is not based on current spend, it's based on what it would cost to build a new network, except, of course, that new network is not being built. So if you look at the figures, the cash return on capital looks around 10%, which is very high. The depreciated value, given that BT Openreach is only spending just over £1 billion per annum, is actually lower than that. And there was something in the Ofcom DCR that said that EE was making a 27% return on capital, which we dispute. If you use the same methodology for OpenReach, you would be making something like 30%. If you're making that much money off a historic investment, it's very hard to know how you could possibly persuade yourself to invest significant capital in a new network. The point on fiber investments and G-Fast and Project Lightning, I think, is that all the claims that are made about the current structure are about things that don't exist today. The current structure is fine because G-Fast will come, and G-Fast will be fantastic. The current structure is fine because Virgin will do Project Lightning. But it's very noticeable that over the last 10 years, neither of those things have happened. And I would say, look at the BT submission to the DCR, where they say G-Fast, if it was taken to the distribution point, would cost £8 billion. But the plan is to do it at the street cabinet. Now, the technology may be wonderful, but I think it's fairly clear from the experience with VDSL that it's going to be very, very variable. So some people will get great speeds, and many people will get no upgrade. The question is that really the kind of provision that we want? And then finally, I would say that the combination with BT Retail creates this need for these very highly complex margin squeeze tests, and we could certainly simplify that. What's the solution? Well, with or without separation, we think concession areas could be an interesting idea. You create lines around communities, and anybody who builds and who creates an open network has a monopoly, much as happened in the cable era in the 1990s. That would reduce the risk of predatory overbuild by the SMP provider OpenReach, and it would sort out the rural deficit. And indeed, GigaClear is showing already that they can do that without any public subsidy in West Berkshire. So I think that's also very interesting. What do investors want? Investors want an expanding asset, expanding capital asset with a good rate of return. I would say at the moment what investors are being given is an asset with an extraordinary rate of return, which is actually much riskier than it appears. Final point on the structure of the market. I think these pie charts tell a very important story. 30 years after privatization, we've recreated a monopoly with BTEE that controls 2/3 of the cash flow in the telecoms market. Telecoms is a scale business. It's very hard to compete against that. Separation would create the pie on the bottom right, which would create a far more competitive and even market, we would argue. So to sum up, I would just like to second some of the things that have been said. We need large-scale investment. We need a political settlement, and something that Stokab has talked about previously is agreement between the political parties on how to go ahead. I think that's also present in New Zealand and unfortunately not in Australia, so that's very important. And then we also just need to square the circle. Do we want a single national infrastructure like Chorus, or more or less single, or do we want multiple infrastructures? And maybe the answer is that we want multiple infrastructures in London, but we want a single infrastructure in rural areas. And we just need to divide the country into 2 zones. Thanks very much.
Right, thank you, Nick. And lastly, I'd like to invite Andrew Griffith to make
Thank you, Jonathan. I'll speak from here, and I'll keep my remarks brief so that we get maximum time for questions. But first of all, I'd just like to thank Reform, because I think it's an excellent conference and a debate that really needs to be had. I think Sky has 3 perspectives that may be of use to you. The first is obviously we are on the front line. We are the UK's fastest growing broadband provider. That's important because that's a large part of where the incremental growth in the industry is coming from. And we're representing our customers here today. We're a customer-focused business. We've fought one by one for every one of our 12 million customers over the last 25 years. And it is our customers that are at the sharp end of the service experience today. In a world where Amazon is piloting pilotless drones to deliver your groceries through your letterbox, we still find it unacceptable that an average customer has to wait 10 days to get a broadband service. We're also a serial innovator. We are firmly on the challenger side of the equation. We brought pay TV, digital TV, 24-hour news, high definition, and every time And this shapes our mindset. But every time we had to defy the naysayers and incumbents who said there is no demand for that. You heard a lot about that earlier this morning, but we certainly share that same spirit. And our bias, to the extent we have one, is that we should be moving as a nation, as an industry, and ultimately ourselves as a provider to gigabit broadband for the UK. Finally, we're a risk taker. We at Sky have always taken the long view. None of our bets pay back overnight. And we've proven ourselves willing to put capital to work and to back ourselves. When SES want to launch a satellite costing billions of pounds, the first conversation they do is come to Sky and ask us to enter into long-term supply arrangements that takes away the operational risk from them, the provider of the infrastructure, and passes it to a consumer-facing organisation that's well-placed to back itself to take those risks. So we are not shy of making those sort of commitments, and we think that's the best way that we can help mobilise our capital in this space. So finally, how do we think that you can mobilise investment? We think the answer is clear. An independent Openreach spun out to shareholders in a process that is exactly analogous to that when BT itself spun out O2, its mobile operator. All of those same issues show that it can be done when there is the will to do so. That company would be a FTSE 100 company. And I think we've heard from both Robert and Nick this morning that that should lay to rest any doubts about the ability of that company to attract capital to make the investment that the UK needs in faster broadband infrastructure. So with those remarks, I'll conclude and allow a maximum amount of time for questions.
Very good. Thank you very much, Andrew. Okay, I'm not going to summarize everything everyone said, but I think very, very briefly, Gerard makes the point there's no money, we need a supportive framework, planning, incentives. Robert, don't monkey around too much with regulation, and don't have too many referendums. Nick, on my right, talked about the investment climate. He thinks it's a bit imbalanced. There aren't enough incentives for investment to go forward, and we need a little bit more infrastructure competition. And lastly, Andrew, Sky wants to invest, but the system is too unresponsive, I think is a fair summary. So with that, I'd just like to invite questions from the floor, if we have the microphones. So I'm going to do the same thing, take a handful, and then so could we start with this gentleman at the front?
Mark Vulcan, formerly Hutchison, and more recently a regulator. I think Robert highlighted the importance of long-term certainty of regulatory framework that transcends governments, and that is the test for independent economic regulation, which was really established and developed in the UK. But the challenge for those regulators is to distinguish where can competition deliver investment, and where does it not do so? So the question of the panel is how to distinguish between where infrastructure competition, such as the mobile industry, can be an effective deliverer of competition, or where is it more like the traditional utilities, where you need a regulated monopoly?
Okay, I'm going to take a few more just behind.
Hi, Robert Grindle from Deutsche Bank. I wonder what the panel thinks, and we heard about anchor tenants earlier and the commitment that companies like Sky have made in the past on that front. But what does the panel think of the idea that, say, Openreach isn't spun out as a public company, but becomes a private company in the sort of Czech mold? And I think Vodafone have recently suggested that owners of that company could be the anchor tenants themselves.
Okay, great. And the lady just there?
My name is Claire Enders of Enders Analysis. I wanted to know what the panel thinks of the government's recent announcement that people would be guaranteed a right to a certain level of service delivery, and also how that particular announcement fits in with the government strategy of eliminating DTT by 2025. In terms of the certainty that Robert Wall was referring, isn't there an atmosphere in the government of buccaneering zeal in terms of taking on a number of real significant delivery platforms and altering the structure of broadcasting?
Okay, great. Okay, well, we'll try and answer those first of all. So maybe we can just go down the line with the panelists, picking up the points that were made. First about the regulatory framework. The second is could a spun out or could a separated OpenReach be owned by the other operators, its customers, anchor tenants, and should people be guaranteed a level of service delivery, and the point about buccaneering.
Again, I'll be brief, Jonathan. Look, there is always a role for infrastructure competition. The challenge is, one, we've tried that, and that has proven subscale to date, so it would need further regulatory enhancements, I think, to be viable. The second thing is there is a public policy piece of this, and infrastructure competition simply fragments the amount of capital that's going in and is likely to overserve those parts of the country that are most favourable to deployment and tend to underserve those parts that are least attractive. So that's a policy view, but it tends to be an outcome that happens. The second, on anchor tenants, I mean, you could construct OpenReach in a number of different ways. I tend to prefer the public markets, partly because, I think Robert will probably say, sorry, I didn't put words in your mouth, but the capital markets are actually very good at pricing infrastructure and supporting that. What operators are best good at doing is committing and taking away the operational risk. And I think that model works pretty well. The other thing that you may risk doing if you had a sort of collective of the current industry status owning OpenReach is you may recreate writ large the current conflict of interest, where at the moment one ISP owns OpenReach and is able to influence its investment decisions. I'm not necessarily sure you solve that conflict simply by having a club of ISPs round the table. By definition, they would tend to exclude new challengers incumbents that may pop up the week after they just codified that little club. I'm not entirely sure what Claire's full points were, I'm sorry. In terms of guaranteed minimum level of broadband, I think that, one, it illustrates the saliency of this as a topic. I think if you talk to anybody today, and if you talk to anybody in the wider world, the importance of broadband unquestionably has increased over the last 10 years. We all rely on it, it's how we communicate, it's how we entertain ourselves. And so in that sense, the mere fact of the government putting forward an ambition, some ambition rather than none, and an ambition of a speed that is greater than the speed today is a step, a cautious step in the right direction, and therefore to be welcomed. But I think a lot of what we have heard from everybody here today is that collectively we ought to be a lot more ambitious, and we ought to try and go a lot further in many respects.
Yeah, so just, I think at the moment we have an insufficiently regulated monopoly and very little infrastructure competition. So I think the idea of separation is to have a more regulated monopoly, and also I think in towns and cities still to go for infrastructure competition. So I think this idea of a divide between dense and non-dense areas, which the French have pioneered, is absolutely key. I would also say versus mobile, there's a huge argument, I think, to fold in mobile towers, which Arqiva has some experience in. There's a very vibrant tower industry in the United States. Obviously, there's a difference with mobile in terms of quality of service versus fiber, which is fairly uniform. But I think perhaps a future separated OpenReach could also own MBNL out of EE. So that would certainly make a huge amount of sense. On the anchor tenancy argument, I really don't understand it. That's an argument for Apple to own Foxconn, British Airways to own Heathrow Airport, essentially to really reduce competition in as many areas as possible on the basis that, well, I'm not sure what the basis is actually. And then finally, on the 10 megabits per second point, absolutely there should be a minimum, but I think it's obviously the wrong minimum. And a lot of writing about what we need, I think, has been argued against by many speakers today. We don't know what we need. And even I, as the least tech-savvy person, sometimes wants to download the latest Mac operating system, and I don't like it when it takes me 4 hours. I'm sure that there are new technologies which will be required in the future, which we don't know about. It's fairly clear nobody expected the market on its own to deliver electricity to whatever it is today, 99.8% of the United Kingdom. So why we expect the market to deliver the right level of broadband throughout the UK is beyond me. It's very noticeable. I think the reason why there's so much anger today, that England is not a sparsely populated country. There are people in Oxford in Surrey who are getting satellite broadband with appalling latency. There are people within the M25 who get 1 megabit per second on BT Infinity. I mean, this is just crazy. So there is a rural problem. I'm not denying it, and we heard about that from Vanessa from Chorus. But we're very, very far off the kind of sparse population that the New Zealand has, or indeed Sweden.
Great, thank you. Rob?
Certainly. So I think the questions around competition to deliver investment and then anchor tenants really strike to the heart of how we assess investment opportunities as infrastructure investors. So this is not specific to the UK or necessarily the comm sector. What we won't do as an infrastructure investor is take a view around game theory, around how competitors might respond, what predatory overbuild might look like. What we will do is we'll take a view around an existing customer base, how that might evolve, an existing revenue stream, or in fact a regulated or long-dated contracted revenue profile. Now, there are other investors in the public markets in support of Sky over the past 20 years have been very supportive of that, but I can only speak for us as an infrastructure investor, and we would look for a developed asset base where there may be some competition at the margin, but which is a core that we can rely on for the next decade or 2 decades of revenue. I think in terms of the anchor tenants owning the company, the only comparable example that I can think of which has evolved and is almost very bespoke is the NATS, or the National Air Traffic Service in the UK, where the airlines owned that for many years. I think there are better ways to allocate capital to businesses, but there are examples of those types of structures. I won't get drawn on the 10 megabits per second, but I would like to address some of Claire Ender's comments. I think it's a difficult situation for me to respond to the leading analyst in the broadcast sector. So we haven't met Claire, but I certainly know you by reputation. I think there is a place for television, be it digital, be it high definition, be it 3D, beyond 2025, that's free at the point of delivery to consumers. I think that will be in support of a prolific rollout of next generation networks. I don't think they're mutually exclusive. And I think any joined up commitment across government in support of an overall vibrant communications framework is important. I don't think one needs to pick them off one by one. But my personal view, and I would say this as an owner of Arkiva, is that I think there is a place for free-to-air broadcast where people get it at 98% of the country without paying for it, and as a means to build the economy as well as the cultural fabric of this country.
Yes. Well, maybe the question about should it be widely available? Yes, I think there should be a government commitment to fast, ubiquitous and affordable connectivity. That raises the question that I touched on about whether this should be regarded as utility. Maybe that issue would be easier if we, as a country, voted not to be in the European Union. But given that we are in the European Union, then we have to work around that. But there definitely should be a commitment. I think the question about different markets is quite interesting. That was made about London versus the rest. In terms of fiscal devolution in the UK, the issue is where you actually have greater control. Should it be so centralised? New Zealand was referred to earlier today. I think New Zealand is the most centralised economy as such in the so-called Western world. The UK is the second most centralised. One of the issues is whether, particularly with working practices changing, with more companies being mobile, whether we should start to have more responsibility, more control at city levels. So I think this whole thing can change. But one of the big challenges from the policy side is that this is such a fast-moving industry, and it's difficult to predict how things will be in the future. One of the problems in the UK when we look at other so-called utilities where we have a current capacity problem is that the UK tends to use yesterday's solutions to solve today's problems. And what we really need to have is an enabling environment where the private sector can come in and take more of the risk. Now, if we can actually get more private sector investment coming into infrastructure in the UK, that might solve the problem. Regulation, it's like a pendulum. The regulatory pendulum has a natural tendency to go to the extremes. In the good times, it tends to go to the light extreme of light regulation because you're thinking about competing with others overseas. In difficult economic times, you tend to go to the other extreme, particularly when costs, or if in this case it's seen as a core activity for many people. Then you tend to have regulation where it's too extreme to protect the consumer, and it tends to, at the end of the day, help the incumbents and deter new entrants into the market. So I think we need to have as light a regulatory environment as possible. And in terms of anchor tenants, I'm not in agreement with that, as has been raised in the panel already. But ultimately, we do need to get more infrastructure spending. The government, I don't think, can do it by itself, so we just need to enable as much as possible to be done by the private sector. Thank you.
Okay, I'm going to take two final questions, because really we're up against it on time. But the lady there and... Oh, I'm so sorry. Okay, no. I take it all back. I'm so sorry. We're going to have to stop. But I would like to thank the four panelists very much for their contribution today. And thank you all. That's been great.